Welcome back to the Keiser Report. I'm Max Keiser. Time now to turn to Simon Dixon of BnkToTheFuture.com. Simon Dixon, welcome to the Keiser Report.
Thanks for having me, Max. Delighted to be here.
All right, fantastic. Simon Dixon, the UK has introduced new legislation dealing with crowdfunding and peer-to-peer lending. Tell us what we need to know about these breaking developments.
So, the UK was the founder of equity crowdfunding and debt-based crowdfunding. And so the FCA are currently in consultation with all the platforms and all interested parties to put together the rules and the regulation for crowdfunding moving forward. The important things is that we are very insistent that we keep the crowd in crowdfunding, because at the moment, for existing rules for the Financial Conduct Authority, they're trying to make it a game for just the rich and just what they call sophisticated investors.
Okay, so there's basically three types of crowdfunding. There is the rewards-based crowdfunding. People are putting, pledges of money, and they get maybe a T-shirt or their name on a credit. We had George Galloway on the show recently. He raised £160,000 for a film. That's a rewards-based crowdfund. Then there's peer-to-peer lending, which is another innovation here in the UK. I believe Zopa was one of the first, if not the first, or one of the first, to allow people to lend money to each other outside of the banking system.
Correct.
And then there's equity-based crowdfunding. And of course, you're one of the pioneers, one of the leaders, BnkToTheFuture.com. And so the struggle or the fight or the consideration now is to keep the crowd and crowdfunding, as you point out. You don't want it to have it just for sophisticated investors, £1 million net worth or $200,000 in income, et cetera. You want to be able to have people put up small amounts of money. It seems to me that in this country, people throw away £2 billion a year on gambling. Why don't they put that toward investing in companies that end up creating jobs, Simon?
Well, I mean, that's our whole point, because in the UK, about 60% of jobs come from the small to medium-sized enterprise sector. And almost all of those jobs are created once a business raises finance. So if you can get more finance into the SME sector, then you could channel that £2 billion of online gambling into something that can potentially make the person wealthier by having assets and learning how to invest at a small level, and also the potential of the business creating jobs and reviving the economy.
It's interesting because in this country, 40% of the GDP is tied directly to the banking sector. Another 40% is tied to essentially real estate sector. And that seems to be where the regulators are really concerned with. That they're concerned with the status quo, with the big banks, the too big to fail banks, and they're not. Surprisingly, they're not really coming to the into the picture in terms of aiding the creation of new corporations using this innovative technique. Other countries seem to be jumping in. So New Zealand, Australia, the United States is going to have passed laws soon. So other countries, is the UK potentially going to miss the boat here?
Well, if we don't get the regulation right, then we could, end up losing it to another country. And so far, the FCA have shown in the consultation papers that they've just released that they're showing some kind of movement towards making sure that this isn't a game just for the rich and wealthy. What you have to remember is that they built their regulations, based upon the banking system, and a bank has kind of three fundamental reasons that a banking license gives them. Firstly, they own depositors' money; they become the legal owner of the money. They can spend the money as they wish, and they actually create the money in the first place.
Okay,
as well.
3 points there I want to reiterate. So when you deposit your money in a bank, they own the money.
Yeah, that's what a banking license does. They become the legal owner of the money.
They can do whatever they want with it.
They can spend it as they wish, and they allocate it through who they lend to.
And they create money from nothing through the fractional reserve banking system and other machinations.
Correct, yes.
So this system is really, is it any wonder then that the economy is, in the UK, you see a 4% decline in lending to businesses and a 40% increase during the same period, loans being created through credit card loans, etc. They seem to want the people to get into debt in a way that's highly detrimental to people. They don't want people to own anything in this economy. They want them to be into debt. That's the whole focus of this economy. Get into as much debt as possible.
Well, you have to remember that when banks are allocating essentially more than 95% of our money through when they create credit and they issue loans, they get to say where all the money is going. If you look at the big 5 banks in the UK, 40% of their loan book is allocated towards property, which is, you know, reigniting economy temporarily based upon asset price inflation. The other 40% goes to financial speculation and serving the financial markets. Only 13% of it goes to small to medium-sized enterprise. The thing that's unique about the small to medium-sized enterprise is that over 60% of our jobs come from it, and also it's where, you know, all productive, non-inflationary value can be created in our economy. So, you know, while we could have regulations to make sure we keep the crowd in crowdfunding, we also have big change to happen at the bank because they're essentially allocating the lifeblood, the money of our economy.
All right, I want to kind of change gears a little bit here. I see crowdfunding as an alternative to the banking system the way it is, using tools, readily available tools. I mean, famously, Russell Brand was on TV recently calling for a revolution. It seems like crowdfunding and Bitcoin are part of that revolution. These are tools that people can use right away to get around this entrenched kleptocracy in the City of London. And apparently the regulators are, as they are in the United States, clearly, I won't speak for the FCA, but clearly SEC, when they're not watching porn in the United States, they're bending over backwards to help guys like Jamie Dimon and Lloyd Blankfein, who are just serial lawbreakers and criminals. But here in this country, there's been a campaign to move your money. And this has happened here, it's happened in the United States. People decided, you know, we're going to take my money out of these too big to fail banks, the big four here in the UK, and I'm going to put it into Co-op Bank. And then now Co-op Bank, because of being attacked by these banks, you know, they attack it, they fill it full of loans, they force it into problems. Then now the hedge funds have bought Co-op Bank. So is there the bank now is failed, it's owned by hedge funds. What are your thoughts?
Well, you know, the unique feature about Co-op is that it was originally founded to be a social bank, and a social bank means that if you're going to allow a bank to create all of our money, and if the banks are directing the flow of our money, then why not have some kind of ethical stance to put it into things which are socially good for the economy? And that was the original stance. Now Co-op has got itself in trouble because it's operating off the same unsustainable Ponzi schemes that our existing banking system operates off. Therefore, to rescue them, and I was in Parliament discussing with some of the MPs that were questioning the CEO of Co-op recently, the hedge funds have to come on. Now the hedge funds, they have no remit for social good. They have no remit for that. They're profit at all cost. So therefore, when the owners become the hedge funds, what happens to the social mission and where does that money get directed?
Right, so as we've been saying on this show for years, this idea of moving your money from one bank to another is like rearranging deck chairs on the Titanic. I mean, you're not really moving your money anywhere. It's staying still within the rubric of an extraordinarily corrupt system, whereas P2P lending, crowdfunding, rewards-based as well as equity-based is a genuine alternative to this. And the FCA, the regulator here in the UK, seems to be dragging their feet on this. Are there MPs now that are supporting it and can possibly mount a credible pushback and to overcome the FCA's resistance? Are there MPs in Parliament right now that are in your camp, essentially?
Well, you know, as well as running a business, I've spent a lot of my time meeting lots of the MPs across the UK, all parties, doesn't matter whether it's left, right, middle, whatever. They all have a remit to increase jobs, and they see this as a real viable stimulation of the economy, and you know, and so we've got lots and lots of support so far. There's been an APPG released, an all-party parliamentary group headed by Barry Shearman MP. To make sure that we keep the crowd in crowdfunding. George Galloway has shown great support on your show, and many other MPs are getting behind this as well, because really it is a way, because we're not creating money, we're not owning your money, we're not deciding where the money gets directed. This is the democratization of investing. This is financial inclusion. And if we take this to where it's meant to be, this is for the first time in history, who gets funded reflects the values of what the people say.
Right, you mentioned George Galloway. We're now exploring ways to fund a £1 million fund using crowdfunding for his run to become mayor of London. And of course, there are considerations to be made, but we are now in the process of looking at that. There's different crowdfunding sites. I myself have started a crowdfunding site called StartJoin, which is launching in December. And we're going to definitely be supporting that Galloway run for mayor and this idea to raise £1 million. And of course, there's going to be local considerations for the way funds are raised for politicians, etc. But here you have the possibility of using essentially a capitalist tool of free market enterprise joined up with democracy to put somebody in office who's going to be working for the people, not somebody like a Galloway, not somebody like a Cameron or George Osborne, who clearly are in the pockets of big business and don't give a flying hoot about the people.
Well, what you have to remember is crowdfunding was built upon transparency. So who is actually investing, you get to see. Who is voting with their wallet, you get to see. And why? Because you're keeping the amounts really small. So, you know, through Bank to the Future, you can buy equity in a business or a startup starting from as little as £10. It allows, you know, complete financial inclusion for those at a very low level. So the potential of crowdfunding, not just for businesses, but for politics and for all sorts of other iterations, for social businesses, is a real force for good.
I want to, again, change gears a little bit. Mark Carney, who's now the new Bank of England head, he's just announced that the Bank of England will begin buying ever lower quality of assets from commercial banks. So in other words, the Bank of England's balance sheet has been expanded by 400%, which is the biggest expansion of any central bank in the world. They went from something like $400 billion in debts to 4 times that amount. He's pushing over $1 trillion worth of toxic debt that they're holding on the balance sheet. Now Mark Carney wants to push that to above £9 trillion worth of toxic debt. Is this going to work?
Well, again, this is kicking the can down the road a little bit further. All we're seeing right now, this is policies designed at keeping the status quo, to keep the Ponzi scheme, the fractional reserve banking system alive, to give it a bit more injection, to take it a little bit further, to inflate properties a little bit more so we can keep on more of the status quo. But in the end, it has to come to an end.
I mean, isn't Mark Carney just a hedge fund manager, and he's trading the balance sheet of the Bank of England like a hedge fund manager treats the balance sheet, you know, money they have under management? They're gaming the system. They're looking around the globe, looking for easy money, easy trades. They can borrow money at 0% interest rates. The banks keep all the profits. They're not lending in the economy. Lending into the economy has dropped 4%, whereas the speculative bubble in real estate is up out of control now. And the wages, of course, are less than 1%. But anyway, so BnkToTheFuture.com, it's available online, right? If people want to find out more, where do they go?
Yeah, right now we're going to BnkToTheFuture.com. One of the things we're doing right now is we're actually eating our own dog food, and we're actually crowdfunding the growth of our company so that we can become an investment bank, a first crowd investment bank. And rather than giving that to the venture capitalists and giving it to the institutions, we want the people to decide whether that actually happens.
Good on you, mate. That's the way to do it.
Yeah.
All right, Simon Dixon, thanks so much for being on the Keiser Report.
Thank you.
And that's going to do it for this edition of the Keiser Report with me, Max Keiser, and Stacey Herbert. I'd like to thank our guest, Simon Dixon of BnkToTheFuture.com. If you'd like to get in touch, please tweet us at Keiser Report. Until next time, Max Keiser saying bye, y'all.